All right, guys, three things for this morning. The first and definitely most important is definitely the U.S. Fed announcement yesterday. Jerome Powell, most analysts, experts, and our guys are saying he kind of crushed it. He nailed his press conference. The key was without kind of sending fear into the market that potential interest rates were coming quick, and yet not worrying that economic growth would be too slow. So apparently he did it fantastically. I watched some of it. I do think that there's now a sentiment that interest rates aren't going to go up until 2023. And he did speak about this. There's no kind of tapering of the bond buying of any kind. So as a result, yesterday, the S&P TSX was up 109. The Dow Jones was up 189. NASDAQ was up 53 points. S&P 500 was up 11. Those are all pretty darn close to all-time highs. So it went, I'd say, really, really well yesterday. The jobless claims came out this morning. They're a little bit up in the U.S. Second point here we're looking at is bond yields. Bond yields are rising. Why? Because the bond market is reflecting what it thinks is a future interest rate hike. The 10-year yield is up in the 2.5 range. The 30-year is in the 2.5 range. The 10-year is up to like in the 1.7 range. So remember that the U.S. Fed announces 25-point increases at a time. So it'll say, okay, we're going up 25 basis points this month, next month, whatever it may be, whereby the bond market is trading on a daily basis. We can buy and sell bonds whenever we want. Therefore, the price is live. So the bond market is an actual reflection of what people today, institutions, individual investors think is going to happen in the future with interest rates. So we do have a nice yield curve. So I don't think that's terribly concerning, but definitely the market thinks that interest rates are going to be going up in the next few years. And proof of that is the 10-year yield going up and the 30-year yield going up as well. And remember, if you own bonds in your portfolio, the reverse correlation with bond and interest rates. So interest rates go up, bond prices go down. If you have bonds, take a good hard look at what you own and if you're getting hammered out there because of rising interest rates. Let's take a look at the third point here. A couple stocks I'm making news. Apple's been in the news forever here. They're in there today again. The reason is they're planning to launch a new line of iPads as early as next month. iPad sales have been kind of through the roof through this pandemic. And if I take a look at Apple in the pre-market, it's down about 1.5%, but most of that is likely due on the interest rates, the bond yields going up, because there's typically a tech sell-off when that does happen. The other one I'm watching here is Sundial Growers. It's up about 4% in pre-market trading. It was up as much as 8% this morning in pre-market trading. They really had a good quarter. This is a Canadian-based cannabis producer. The company said it did a successful restructure, reported better than expected revenue. So all in all, good news if you own that stock. All right, let's take a look at the pre-market numbers. Dollars down 18 basis points to 80.44. It's been above 80 cents now for a while. Dow futures down 10 points to 32,896. If we take a look at gold is down about $18, trading at 17.27. Oil taking a bit of a breather, down 81 cents to 63.79.